Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions featuring the proprietary bull bear point and figure market breadth summary chart for July 21st, 2019. Market breadth. With this past week's market decline, our bull bear point and figure ratio at 0.96 fell from 1.12 last week. The total count of securities in bullish or bearish patterns increased 5% to 3,036. The count of bearish stocks increased 14%, while the count of stocks in bullish patterns decreased 3%. The Pirls PNF market breadth summary chart shows us a market now 1 week in bearish territory. Paid subscribers have access to the Open Office Calc data, from which the chart is generated. You may become a paid subscriber by emailing s2pmarketsignal@protonmail.com for payment and access instructions, or by visiting Patreon. To receive the weekly Pirls Stock Market Commentary via email, free of charge, simply enter your email address in the space provided and click Follow. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 21 points for the first decline in 6 weeks. At a positive 88.47 points, it continues below all 7 tops above plus 100 and above the 5 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on higher average daily volume. Momentum. The CCI 20 daily in a Woody's uptrend at 52.26 is down from 130.38 last week. It continues above the plus or minus 50 range required for a Woody's zero line reject long entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 18 weeks ago, while the daily CCI 20 began a Woody's uptrend 4 weeks ago. The CCI 20 weekly in a Woody's uptrend at 111.34 fell from 123.19 last week. We await the return of the CCI 20 weekly to the plus or minus 50 range for a valid zero line reject entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: gold and silver and some tech on the top. Oil services and REITs on the bottom. Bullish disk drives continues in the top 5. Semis, networkers, and computer hardware have entered the top 5. Oil services continues in the bottom 5. Bearish, REITs has re-entered the bottom 5. Gold and silver leads the top 5. Focus this week from www.actingman.com. Quote, "The calm before the storm," end quote, by Peter Tenebrarum. Intra-market divergences galore. U.S. big cap stocks have rallied to new highs in recent months, but just as in the rally from the low of the February 2018 mini panic to the September-October 2018 peak, sizable divergences between different indexes have emerged in the process. New highs in the big cap indexes, Dow Jones, SPX, NDX, are once again not confirmed by small caps, RUT, the broad market, NYA, and a number of subsectors, such as the DJTA, which is included in the chart below. According to Dow theory, the DJTA must confirm moves in the DJIA to validate its trend. From the top, weekly charts of the DJIA, SPX, NDX, RUT, NYA, and DJTA. The recent new highs in the three large cap indexes have not been confirmed by small caps and the broad market. Note also the sizable RSI price divergence in the DJIA, which is mirrored by SPX and NDX. This is a sign of faltering momentum that is often seen ahead of trend changes. Government bonds and gold have rallied strongly as well this year, and while these markets also reflect rate cut expectations, they normally don't move in the same direction as stocks for very long. It is a good bet that something will eventually give. Conclusion: the divergences between the different indexes, at the very least, represent a heads up that another correction is likely to begin fairly soon. In view of the increase in market volatility since the January 2018 peak, the next downturn will probably be quite a doozy again. Thank you for watching this week's Pirls Stock Market Commentary video featuring the proprietary bull-bear point and figure market breadth summary chart compiled by Donald Pearl. S2P market signal at protonmail.com. For Pirls Stock Market Commentary, I'm Cynthia Pearl, hoping that you have been enjoying a peaceful and pleasant weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.